I wonder where that VC is.
I'm right here.
Oh my gosh. All right. So hi, I'm Ronan.
Nice to meet you,
Nice to meet you. I have this fabulous idea. It's a Fitbit for cats.
Oh, yeah?
Yeah.
And when did you start it?
Well, I haven't quite started it yet.
Are there
I'm looking
VCs
for a
chasing
VC.
you?
I'm looking.
I have my checkbook. You have to take my money.
Welcome to the 9th episode of Femgineer TV, brought to you by Pivotal Tracker. I'm your host, Poornima Vijayashanker, the founder of Femgineer. Femgineer is an education company where we teach innovators how to build software products so they can find freedom in their careers, enrich other people's lives, and make the tech community a lot more inclusive and flexible. In the last episode, we had met with Melody McCloskey, the CEO and co-founder of StyleSeat. We got the backstory to how Melody had raised nearly $40 million for her startup. In today's episode, we're going to explore the opposite perspective and really dig into the mindset of an investor to help you viewers out there understand what it takes to get capital for your startup. To give us some perspective into how investors think, I've invited Shruti Gandhi, the managing director of Array VC. Shruti has been a software engineer, a startup founder, and of course now an investor. Thanks for joining us today, Shruti.
Thanks for having me.
Yeah, it's great to have you on the show today. And I know you've worn many hats through your career. So I want to just start by going back in time to the beginning and asking you, what got you interested in tech to begin with?
I wrote my first program in BASIC, 6th or 7th grade.
Nice.
In India. And the code created music. And as a girl, I got really excited about that. So I started exploring that over the years. I was just playing video games, Atari and Nintendo. And then I taught myself how to code between college and high school. That's when I really got into it. I got a summer job at a university in New York. And, everything that I did was challenging, was very logical because I loved writing code, and now I'm here.
Yeah. So when you were a software engineer, I know, you filed a lot of patents, you've worked at some big companies. What were some of the themes of the products or projects that you worked on?
I was always early in technology that, is popular now. At that time, I was working on, till early 2000, for example, I was working on location-based services, voice over IP products, instant messaging. So some of the Lotus same time code has come out of some of the work I've done at IBM. So very early on, all this is before Google Maps and before Foursquare, before Google Voice. So that's some of the things that got me started early on in my career. The patents have been all in this space that I've been working on. My master's thesis was also in analyzing user behavior in instant messaging platforms. This is before, we were talking about big data in 2007.
Nice. And how do you think that it's changed over time since you were working on it? Do you feel like the technology has evolved, or do you feel like it's built upon some of your ideas?
So, in the tech world, the underlying concepts are the same, but over the years, the names keep changing. For example, location-based services was something I was working on early 2000, and we detected location based on IP address MAC router, but now Google does it much better. So I would say that tech evolves, and now because of scalability, more and more people use this technology, and we get better over time.
And you eventually transitioned from being a software engineer to a startup founder. Let's talk about that transition. What motivated you to go from being an engineer to an entrepreneur?
I come from a family of entrepreneurs.
Nice.
My dad's a serial entrepreneur, and I, over the years, knew that I wanted to do something, but I just knew that I wanted to get a lot of core skill sets in accounting, marketing, and on top of being an engineer.
Yeah.
So that's what I went to school for over time. But I left IBM to start a company. Before I left IBM, I was working in the chairman's office there for Sam Palmisano. There we were working on a lot of macro ideas, how to, get access to fresh water. What does a new enterprise look like? Security, all sorts of amazing macro topics. But, as I started to, explore those, I realized that I wanted to build something bigger as well, and my engineering skills were not enough. That's when I said, okay, let me start a company, but at the same time, let me go to business school to get all these skill sets. And I think they both happen in parallel for me.
Got it. And what was the idea around your startup?
Yeah, it was, again, I was very early.
Yeah.
This is 2009, when I knew that Dunbar number was a big thing, where we are not going to be able to keep up with more than 150 people at a given time.
Yep.
So the idea was to, how do you stay in touch with the thousands of friends you're going to have on our social networks over the years, and how do you meaningfully connect with each person at the right time when you're working on something relevant to them. So that was the company. It was called Pensieve, based on Harry Potter.
Nice.
Yeah.
Yeah. And what was the outcome of that company?
Unfortunately, I worked on it for a while. We had a really good product. I took it through the New Venture Challenge competition at business school booth. But just to admit it, I failed. I couldn't raise any money for the company, and it was because the investors at the time didn't believe that I had a proper business model around the company. So that's when, over the time, I pushed at it, and then I had to give up because of some team dynamics shifts. So that's when my transition to VC happened.
Nice.
I failed, and I said I'm a very curious person, so I wanted to figure out why I failed.
And so you decided to then pursue being an investor.
Exactly.
And how did you get started in investment?
It was during the time. It was towards the end of my business school time frame, and Booth is really good at teaching you and giving you all the tools you need to make this transition happen. So I started interning at a firm out of Chicago called I2A. It was through one of the classes at business school. That was a very short stint. I think it's called Chicago Ventures now, that fund. But between my first and second year of business school, I also interned here at a fund called High Bar. They invest in distressed startups, and it's a lot of the Sun founders, and they originally came on to start that fund. So that's when I truly got involved, and I learned a lot about venture, more about the financing world that happens in venture as well. And one of the companies I helped them invest in got acquired by Brocade. It was a virtual networking company. Yeah. It's called Viata.
And how do you think being an engineer and an entrepreneur had helped prepare you for being an investor?
Engineer, definitely. So that was a virtual networking company. I reached out to all my contacts that I could at IBM, all the other companies I knew, to just understand if this tech was good. I personally could understand all the lingo. I could connect with the founders. And as a founder, again, same pattern. I could talk to them about their tech, about their journey, and my own journey. And so it was pretty relatable on both ends.
You went on to manage your first fund through a VC. So which VC was that, and how did you get started?
Yeah, so Samsung was putting together a fund, invest $100 million fund.
Wow.
Yeah.
That's a big responsibility.
Yeah, so I was one of the early people that helped it going, and I got some amazing experience there. It's a corporate VC, as some people call it, and there's corporate VCs out there like Google, Intel, but Samsung was different in a way where they invested in companies with a collaboration plan. So that was awesome, because now I got to understand a lot about businesses and different business units, and Samsung does everything: hardware, software, components, many of the other things. So I went on to just understand more about the technology and what was needed there, and then and ended up investing in 4 companies.
Wow. Yeah. And as you were getting that fund off the ground, what do you think were some important takeaways for you that you were glad you experienced there rather than going off and starting your fund to begin with?
Yeah, I think the biggest thing I learned there was just be helpful. I think as an investor, we often get involved in our companies and then lose track of who needs the most attention, what board are we on, and how do we scale ourselves, because it's a services business.
Yeah.
And I learned early on to be able to handle that really well. So I often call myself the 2 a.m. investor. It's, if you're up at 2 a.m. and if you need someone to chat with, feel free to, G-chat me or text me, or that doesn't happen that often.
Sure.
And it's more of the AIM culture. I don't know if you remember that.
Yeah.
We just hang out as an engineer on AIM. But that was the idea. Look, you're not alone in this journey. And that's what I did at Samsung. So those entrepreneurs that I interacted at the time, including the ones I didn't interact with, are involved with me in some shape or form even to this day.
Oh, that's great. Yeah. So it was a great way to start building relationships early on and then continue to build upon them as you're developing your own firm now.
Yeah.
Awesome. And from there you went on to True Ventures.
Yeah.
So what was the difference from going from corporate to early stage seed?
So the stage has always been the same for me. I love helping founders early on, from when they start with their ideas to helping them get to their product market fit. At True, the difference was we didn't have a collaboration plan, so deals happened sometimes when I would find out about them, and someday the term sheet was already signed in a couple of days. So that was different. At Samsung, it took a bit longer. So there's pluses and minuses for both, but the speed is definitely a big shift in how things get done at an institutional versus a corporate VC.
I see. And for entrepreneurs out there, what should they be thinking about in terms of, since you've worn both hats, the corporate versus institutional? Like, what are some key things that you were looking for at Samsung that, as a corporate VC, that you may or may not have looked at True as an institutional?
So corporate VC is a great tool and an investor if you know, one, the corporate VC is not going to change the course of your company, and the second, it's good, if there's no signaling that creates. So if you're taking money from someone like a Samsung, and if for whatever reason there is no collaboration plan for your company with Samsung, then the next round investors are going to wonder, what did this money do, and why did you take this money? It often isn't that case, but that's just how outsiders look at that.
Yeah.
At Samsung, we spend really good amount of time, a lot of time working with many business units trying to figure out, hey, where would this product fit in best? And only after that was kind of, that synergy was explored, we would then go and invest in the company. That often is, a long process. So it can drag on for a while.
Got it. And
so that's when you say, corporates don't come in fast, but that's what they're doing in the back. And then hopefully once you invest, all that is, foundation work is done, and now you're just talking about maybe like, how do you execute that plan? So that's the biggest difference with the corporate VC versus like an institutional, which is a partner, like say a couple of partners, depending on the process, you end up investing in that company.
Yeah. And when you were at True, what were some of the key areas that you focused on adding value for the founders?
So True has a lot of good programs on, that they already have, but I often try to, again, keep my old, investor pattern where not only it doesn't end when you put the money in, but you actually then continue to help the founder, which is what I do to this day now, which is actually what made me start this fund.
Yeah. So what are some areas that you help founders?
So, it starts out from, hey, it's a good idea, and help me vet it. So I constantly am talking to founders, friends, engineering friends, who are like, I think this is cool. And then I tell them, do A, B, C here. Sometimes I have like these templates. I even like follow up with my friends on like, do this, and then let's talk again after you've done so-and-so exercises.
What's an example of a template you give people?
Basically it starts out like, do market research, find out your market size, find your audience. I mean, those are some very preliminary things. Is it a need? Or is it just something that you have a problem with? One of my best learnings from a really good marketing professor was, you are part of, she didn't use quite the 1%, but she said, you are a weird bunch of group. When you start something, don't just ask your peers. go ask the people outside your bubble on if this is a valid problem. And it stuck with me. It was a more of a CPG
Consumer
class
product goods.
Yeah, class and concept, but it stuck with me. And to this day, when I'm thinking of something, we often talk about the Silicon Valley bubble, and,
right?
All that, and all the companies that are coming up with just particular target markets, but who knows where they go.
Yeah.
But over time, that's one of the lenses I look at, and I ask the founders to kind of explore that as if they want to be a big global company.
Yeah. And what else? And you said you got multiple templates, so anything else you'd add to that?
Well, that's a good beginning. Then once they have that, I also then ask them to build a product, even if it's minimal viable product, MVP. But I go them the first thing after they are more concrete, if they know what they want to build, I actually go ask them to get customers.
Yeah.
So, that's the biggest shift that what I provide in my fund as well, and I'll talk about it in a second. But, I say go talk to people that will use your product. And I'm more focused on enterprise, so it's easier to go talk to, the Googles and the Facebooks and Twitters or anywhere your friends are that might want to use your product, right, at these companies. But basically, I say go talk to your customers and see what their pain point really is. Is this a pain point? Is this product going to be loved and shared like the consumers in the consumer world do?
Right.
So that's the other lens I add on top of that, and then I put them on that task. That usually takes good 6 months.
Yeah, definitely. So now you've started Array VC. Congratulations.
Thank
It must
you.
be great to have your own fund.
Yeah.
Let's start there. What inspired you to strike out and start your own fund?
I always wanted to do that once I started becoming part of the venture world. And, for me, I wasn't clear when. I just knew it will happen. Through the journey in the corporate world, I'd already been also interning at a few other funds out of Chicago and here. Lightbank was one of them. So over time, I'd been a part of 5 funds.
Oh, wow.
And,
yeah, that's a lot.
Yeah, so I'd seen it all. And I think for me, it was now figuring out as an engineer, should I go back into the operating world and get more, skills in the world, or should I, continue to do something that I love? And I decided to do both. And starting a fund is like starting a company. A lot of founders don't realize that, investors are also out and about raising money, and they're also doing the same things they are, just in a very different, just a little bit differently. So that's what I wanted to start out this fund with. The other thing I noticed in all of these experiences was what you asked me earlier. How do I help out the companies after I put the money in? And I realized that there's bigger funds out there doing that, but not that many smaller funds who do that to this day. So we call it the value add VC.
Right.
So I wanted to come and do that from day one. I didn't want to just be the 2 a.m. call, but I also wanted to say, hey, look, by the way, here's some other people you should talk to. By the way, here's some of the companies that would like to use your product, which is the sole, purpose of this fund that I started. The way I structured it is I help companies get in touch with customers from day one.
Oh, great.
And that I have a network of over 200 people that have, pretty executive, pretty senior executives from a lot of the companies here and outside of the Valley, who are willing to help the companies from day one. And that's what I'm trying to start and differentiate based on.
Got it. So you're essentially bringing them customers that they can test their products and their ideas on, which is always a hard challenge for a first-time founder or even a serial entrepreneur to get that initial traction going. So do you have an investment thesis? And if you do, what is it?
Yeah, so investment thesis is bottom-up economy in enterprise.
Okay.
What
does that mean?
Yeah, so in our regular world, we use applications like Pinterest, Facebook, Twitter, whatnot. And then we go to work and we have to use some very antiquated technology, right? That's when I came up with the term called agitated workforce. It's people who then, like us, go to work and then say, I don't like Outlook. I'm going to go try Mailbox, Handle, whatever I want to try out. By the way, on top of that, I'm going to use my credit card to pay with it. And, these may not be like the perfect example of what I'm talking about, but the companies that do, take advantage of this trend is Slack, Neuralink, Yammer, Box, GitHub, all those. So that's the fund. The fund is, people who can use their credit cards to make that purchase, and then, tell their friends about it, bring virality in an enterprise. This did not exist, before, and, realized the investments I've made as an investor in my previous firms were all focused, had this bend, and that's what got me excited. So I decided to start a fund with this thesis.
Cool. So it's really empowering employees to be the consumers, but the product itself is more of a B2B focus, so helping businesses.
Yeah, so this does not take away the enterprise sale that the companies have to make, but it accelerates it. When the CTO/CIO finds out that the entire organization or big percent of it is using Dropbox or Box, then they have to figure out a way to make it compliant.
I see.
Get recurring billing, invoicing, so forth. And that's when, even if that means they have to pay more, they go do it.
Right.
And that's a key shift that's happened in enterprise over the last couple of years that's going to just grow more and more over the years.
Nice. And for yourself, when you're evaluating companies, I'm assuming they have to be 100% on Thesis, but what are some other things that you're looking at in terms of either founder's background, traction? How do you go about evaluating them?
So just to kind of add to a little bit more to the thesis, people often think that this is relevant only to the Twitters and the Facebooks of the world, but actually one of my companies that I saw this trend early on and was in education. So teachers loved the product.
Oh, okay.
And it was a company called Ngrade. And there was so much loyalty, and school districts ended up buying the product and paying for it. That company is now acquired by McGraw-Hill.
Oh, wonderful.
So that was one of the trends. I saw a similar trend in health where doctors, love a product, and then hospitals end up purchasing that. So this is repeatable behavior in many verticals. So just, I guess, to add, so
it's not just tech.
I do invest in different verticals that take advantage of this behavior. So I'm also a sucker for women entrepreneurs. Them and immigrants, I have a similar pattern of working hard, making sure they take the buck as far as they can. So that's, as an engineer and a founder myself, I feel that I want to make sure I can do whatever I can for that group of founders. But generally, any hardworking founder who has some really, far-fetched vision that's deep tech. I love machine learning, security, productivity tools. So any of those areas, I will definitely look at the company, and if I can't invest, I will definitely help them with intros or give them my feedback. The other thing I look for, as I said, is if you have not gone out of your way to get your product customers, even if it's not paid, but just proof of concepts, then I'm not sure that you're really serious about about the company as a founder. So if you don't have access, I hope you get access to certain companies, and that's where you can consider me as your ally there. And then hopefully over time you build something meaningful, and I can, we can have a conversation for investment. But most of the companies I invest in have at the very least done their homework on the need, product market fit per se. They don't know if it is yet, but they've, done their homework on it, and they go talk to customers. They have a few proof of concepts. Some have even paid customers. But for my portfolio companies, I actually help them figure out their pricing.
Oh, wow. Nice. Yeah.
So that's the natural next step I'm involved in. Recruiting for sure, but, helping them figure out the reach of their product. How do you price them? And then, when they start getting a good MRR going, I help them.
Monthly recurring revenue?
Yeah.
Okay.
I help them with their pitch decks, getting in touch with a lot of the investors I invest with and people in the network. So it goes from there on to helping them raise their next round.
So that's not a very typical VC job. I know a lot of people feel like, wow, investor, it must be so glamorous. You're like jet setting, but you make it seem like you're an entrepreneur. You're doing calls at 2 a.m. You're helping people with pricing. Yeah. What's a typical day look like for you, whether you're talking to a portfolio company or evaluating a deal?
Typical day, it can go anywhere from, talking to at least 2 to 3 companies a day. Often in person, if not over the phone, or then talking to some of my own investors. The fund is also structured around, as I said, the network of people that are willing to sign up and help my companies from day one. Often, a lot of them are my investors. There are people from all the companies,
That's
top
great.
companies. Yeah. So they, the minute I see something awesome, they're my first calls. I'm like, hey, here's something. What do you think? And if it's relevant, they also get connected to each other. So founders love that. They're getting, the value of the money that I haven't even put in front, even before I do that. So my days look like that. And then oftentimes it's just catching up with other investors in similar stage of my as what I invest in, or follow on stages, because I love to hear what some of my friends at the bigger firms look at. And so that gives me, the more of a framework to help my companies accordingly, and then connect them to each other when the time is right. So it's juggling between many of those things. And I'm also putting together events, often with corporates, just to make sure that I have all the right SaaS people involved, and all the right vertical experts involved, all the right machine learning experts involved. When the time is right, I make all that intros and connections for my portfolio companies.
Yeah, so it's pretty deep relationship building.
Yeah.
Let's explore the opposite. You've talked about what it takes for you to make an investment. What are some things that you see either founders do, or just the way their companies are structured, that you would immediately disqualify them, or just feel like they're not meeting your criteria?
It's very straightforward. When you have a very good, focused thesis, it's often easier to say, look, I'm not going to, invest in maybe like a photo app or something that's just more consumer. But I do offer that, and I often, if they still want my time, I figure out a way to be helpful. I do have a team of people that help me out in the fund as well, so that helps. The other thing is stage. I have toyed and done a lot of work on some companies in much later stages, and then backed out a little bit, because I just realized I like to be very hands-on. And if I cannot do that at that time, when there are other investors, maybe a larger fund in Sandal, then, if the founder doesn't need me, then I probably will not want to put the dollar in. I don't like to be a passive investor.
Got it.
So those are the 2 big things for me.
Yeah. And what's too early for you?
Too early, as I said before, just not doing your homework.
Yeah.
I mean, I've had some very star entrepreneurs, with exits again in companies that we admire, but then, they go and start a company in an area that they don't know anything about. So I still expect them to have done their work, and same goes on with all the other, in other companies. I will tell them what kind of work they should do, and so, but again, if it's clear, this is a pet peeve of mine, just by the way.
Yeah, it's fair.
I feel like there's a lot of fat entrepreneurs out there today. Just
not physically.
No.
Mentally.
Yeah, mentally.
Yeah.
Good looking.
Yeah.
They just, it's money is easy to get right now. And there's a lot of people who, I just had 2 calls yesterday. I don't want to work for anyone. It's like the line, or, I think I have something, it's really cool. But they don't do their homework on, like, who else has been doing it, why is it a need. And to me, that scenario, of like, I think it's great, but I think you'd be better off being at a company, learning and getting technical skills for a while before you go off and do this. So that's when I feel like that's not too early, but I just don't see the commitment from the founder. If things, shit hits the fan, sorry.
Right.
Pardon my
language,
I know they'd be out.
Yeah, I think that's a fair assessment. I know I coach a lot of people, and one of the first questions I ask them is this an interest or commitment? If it's interest, then go join another startup.
Yeah.
I mean, that's what I did at my first startup. It's not like I would have thought to start a company or had the wherewithal. So being an early employee is just as valuable.
I agree.
Sometimes even better because it's a little bit less stress, not 100%, but a little bit less. You learn a lot, and then you can transition to being a founder and taking on the full responsibility and really committing to your idea, your company, your investors, your customers. I think a lot of people forget that they need to think about this as a commitment, not like, oh, okay, I'm gonna like give this a shot for a year, and then if everything goes awry, I can just back out. But
yeah, you're right, Poornima. I think
Yeah.
the other thing that these people can also learn is scale. Like, I think that's a big challenge that's underestimated. Like, if you can talk comfortably about how I brought this company from $1 million in revenue to 10 to 100, or the company grew from 50 to 300, under them, or they were part of a team and they
Yeah.
saw that happening. That's valuable experience. You're not going to get that, again in your lifetime as an opportunity. So take it, go learn something. And I think that's where, you hit the nail on the head.
thank you.
Yeah.
So how big is your portfolio today in terms of companies?
Yeah, I've made about 3 investments so far.
Okay.
And a follow-on investment already in one of the companies. I'll make about 10 more investments this year.
Okay.
So I have to be really busy.
Yeah.
Yeah.
And do you mind sharing what your check size is? Does it vary?
No, not at all. It varies. I like to be under 250K, so
Okay.
that's my check size usually.
Great.
Yeah.
And you're usually, like you said before, coming in at a seed stage, so usually seed, but you do reserve some capital for a follow-on investment in a Series A to B.
Yeah, so actually seed, whatever you want to call it, post-seed, depends if I can get a meaningful amount of company for the money I'm putting in.
Got it.
And then I do reserve money for follow-ons. I also work with other investors who I bring to the table as well. If I think it's an area that they would be good at as well. So I like to invest with a few friends.
So for our viewers out there who are thinking about getting introductions to investors like you, what are 1 to 2 initial steps they should do before having that intro or before requesting that intro?
Good question. Actually, 500, I talked about this recently, I think last week, was exactly that. It was, I can email everyone that whole pitch because we recorded it.
Yeah.
But it was basically just do your homework, just like, entrepreneur, maybe not a good fit for the VC. The VC may not be a good fit for the entrepreneur as well. And oftentimes when you're raising money, you forget that. You would want money from anyone, it feels like at that time. But if it's not a right fit, the investor is not going to be able to help you.
Right.
And if that's, if you need help, basically you're on your own at that time. And that, even $2 million you raise or whatever you raise in the first round, the money is not going to be the blocker. What's going to keep you up is like, how do I access these customers? How do I hire this other person I want? And that's when you really want a good network of investors to help you out. So I would say do your homework. And then when you do find a good fit, check their portfolio to see if there's a competitor. Do not, go waste your time again talking to investors who've invested in your competitors. And then once all that is okay, and if you really still like an investor, follow them on Twitter, learn more about them, find warm connections to them. I have a whole thing I write about on what warm connections mean as well. But regardless, I think I will talk to any founder that, even in cold emails me based on, I've had people reach out to me and say, I like your article, I agree with your point of view, will you look at my company? And I do.
Oh, nice. That's nice of you, yeah.
So it's follow me on Twitter or LinkedIn, and I am pretty responsive.
Awesome. Well, we'll be sure to include Array VC, and you can follow Shruti at Shruti on Twitter. We'll make sure to include the links in this video. So when you're not helping companies and raising capital, what do you do for fun?
I like board games.
Yeah? What's your favorite?
My family and friends have played Monopoly Deal.
Makes sense. Yeah.
No, not Monopoly. It's Monopoly Deal.
Okay.
It's a card game. Doesn't last for that long. And it can get very strategic.
Yeah.
And you can explore people's minds. Me with my brother.
Oh, nice.
I torture him.
Yeah.
But I love board games, and I often have board game nights, and I love to cook as well, so I mix that together.
Wonderful.
Yeah.
Yeah. I love this new game called Innovation.
Oh, cool.
Have you heard of Innovation?
No.
It goes throughout history.
Okay.
And, it starts with prehistory, and it's essentially, screw your opponents and try to score the most. But it's really fascinating to see how technology changes over time. So you'll be in one part of history where they've just invented mathematics. There'll be another part where they've just invented databases. But your whole goal is to get achievements as you move through history, get more points, and try to get everybody else to lose. But that's one of my favorite new card games.
Well,
yeah.
we'll have to play that.
Yeah, we should. We should definitely play that.
Cool.
Awesome. Well, thank you so much, Shruti, for being on the show today.
You're welcome. Yeah. Thanks for having me.
You're welcome. Yeah, and thank you to all of you viewers for joining us today as well. And of course, to our sponsor, Pivotal Tracker, who helped us in producing this episode of FemGenier TV. And if you've enjoyed this episode of FemGenier TV, then please share it with your teammates, your friends, and of course, your boss. And let me know in the comments below what was your favorite part about this episode. Subscribe to FemGenier's YouTube channel to receive the next episode of FemGenier TV, where I'll be hosting the CEO and co-founder of Mattermark, Danielle Morel. Thanks for tuning in today, and I'm looking forward to reading your comments. This episode of FemGenier TV is brought to you by Pivotal Tracker. Build better software faster.
I sleep just a little. I in fetal position anyway, and I can fit into a seat this big.
Nice.
It's amazing.
Yeah, it's good being small. You can really cram up in those tiny seats.
Yeah, sleep is important to me.
I agree.
I wonder where that VC is.
I'm right here.
Oh, really? Oh, cool. I've got this great idea.
Oh yeah, tell me more about it.
Well, it's for pets.
Keep going.
I just keep going. I don't have an idea.
What is it? I heard about the pet health tracker. Is that?
Yeah, it's like a Fitbit for cats.
Yeah, I heard about that one. I heard it's really, really expensive these days.
Well, no, I've got one that's like $1 a month.
Okay.
Hey, it's Poornima. As you know, I'm working on my second book. It's called Present, The Techie's Guide to Engaging an Audience. And this time, I'm co-authoring it with Karen Catlin.
Poornima and I are both technical women who have given hundreds of talks, but in the beginning, they weren't all exactly great. Now we have studied the greats, we have learned from our mistakes, and we wrote the book we wish we had had when we started our public speaking journey.
The book is available now for pre-order, so check it out, and if you like it, which we're pretty confident that you will, reserve your copy today.